Okay, so what if a company could just print money and do it completely legally? Sounds a little crazy, right? Well, today we're diving into the story of a public company, BitMine, that's actually trying to do just that. They're turning their own balance sheet into a nonstop passive income machine. I mean, really think about that for a second. What if a company could make a ton of money without selling a single thing? No products, no marketing team, no dealing with supply chains. Just pure automated profit. It honestly sounds like something out of a sci-fi movie, but this is the very core of the strategy we're going to break down today. Yeah, this isn't about selling widgets or software. It's about owning a strategic, productive asset that just works for you, around the clock, generating value with basically zero operational cost. Kind of like owning a factory that runs itself, but instead of making cars, it just makes cash. And this radical idea, BitMine is actually making it happen. And this is the number that really changes the game. $420 million. Now let's be super clear. That's not revenue from sales. It's not even profit in the traditional sense. That's the annual income their treasury is expected to just generate all on its own. Pure, raw yield from the stuff they already own. So you're probably asking, where in the world does a number like that even come from, right? And it's not magic. The answer is just one word: scale. The sheer size of the company's balance sheet, that's the key. And believe me, we are talking about a true financial heavyweight here. Just take a look at what makes up this $13 billion treasury. The absolute crown jewel is over 4 million Ethereum tokens, and that's backed by a cool $1 billion in cash, just for stability. So you see, this isn't just a big balance sheet, it's a strategic weapon. And just to put that into perspective for you, holding over 3.3% of all the Ethereum in existence, that's not just a big investment, that's a foundational position. It literally makes BitMine a central pillar of the entire network. I mean, their actions can have a real, tangible impact on the future of the second biggest crypto in the world. It's a huge deal. But how did they even get here? To really get it, we need to look at BitMaine's massive pivot. I'm talking a complete 180-degree turn from their old way of doing things. Okay, this table right here, it perfectly lays out the difference. Their old model was crypto mining. And let's be honest, that's a race to the bottom, right? Insane energy costs, super thin margins, a tough business. But the new model, Ethereum staking, just completely flips the script. Instead of burning resources, they're now getting paid to secure the network. And that leads to gross margins that analysts are literally calling practically infinite. It's a whole different ballgame. Now, this entire grand plan, it would be totally impossible without a core piece of tech they built completely from scratch. It's the engine driving this whole thing. It's a staking platform called MAVAN, and it was designed with one audience in mind: the biggest players on Wall Street. So, MAVAN, it stands for Made in America Validator Network. And trust me, that name is no accident. It tells you everything you need to know about who they're trying to attract. This isn't some garage setup for hobbyists. No way. This is an industrial-strength machine built to solve all the big problems that keep that institutional money sitting on the sidelines. And just look at this checklist. Every single point here is a direct answer to a question from some nervous risk manager on Wall Street. U.S. jurisdiction? Check. That means they play by U.S. rules. Enterprise-grade hardware? You know it. That means it's not going to fail. Near perfect uptime and almost zero slashing risk. And slashing is basically the penalty for messing up on the network. And they've pretty much engineered that risk away. This is exactly the language that big conservative money understands. This quote just sums it all up perfectly, doesn't it? MAVAN isn't just a piece of tech. It's a direct message aimed straight at the boardrooms of the biggest asset managers in the world. It's basically saying, hey, we get you. We speak your language. We've built the safe, compliant, and super reliable platform you guys been waiting for. Okay, but that initial $420 million yield, that's just the start. The real genius of BitMaine's strategy is what they do next with that money. This is where we get to see the compounding flywheel kick into high gear. They have a name for this concept: treasury as yield. And honestly, it's a pretty revolutionary idea. For like 100 years, a company's treasury was just a sleepy pool of cash. It was a cost center. But with this strategy, the balance sheet basically becomes the income statement. The assets themselves are constantly working, constantly earning. So how does it actually work? Well, the treasury generates about 140,000 new ETH every year. Now, instead of just selling it, BitMine feeds that yield right back into their MAVAN staking engine. So the reward, it becomes new principal. And then that starts earning its own yield. You see, it creates this incredibly powerful, totally automated compounding loop. In this whole compounding machine, it has a very specific and pretty ambitious target. They call it the alchemy of 5. The end goal here is to use this flywheel to grow their holdings from the 3.3% they have today all the way up until they control a whopping 5% of the entire Ethereum network. I mean, if they pull that off, they'd be so deeply entrenched that their success and Ethereum's success would be one and the same. Which brings up a huge question. How do you even value a company like this? The truth is, it doesn't really fit into any of Wall Street's neat little boxes. All the traditional tools and metrics you'd use to value a company, they kind of start to break down here. And this has forced analysts to get really creative. Some are calling BitMine a kind of sovereign wealth fund. Others see it more like an on-chain government bond. And a lot of them just call it the Ethereum proxy stock. You know, the simplest, most regulated way for a big fund to get exposure to Ethereum's growth. But, of course, this is a two-sided coin, right? The upside is, well, it's incredible. You've got those practically infinite margins, the automated growth, the uncapped scale. But the downside is just as real and just as big. The entire model is extremely sensitive to the price of Ethereum, plus it's exposed to all sorts of protocol risks and regulatory uncertainty that a normal company just never has to worry about. You know, when you take a step back and look at the big picture, you realize this isn't just about one company. This is like a proof of concept for a completely new way of managing corporate assets. We could literally be witnessing the end of the sleepy, passive balance sheet as we know it. And this isn't some far-off dream either. This revolution is already on the calendar. The key date you want to circle is Q1 2026. That is when BitMain plans to become the first public company ever to report direct protocol yield as its primary source of revenue. That's going to be a landmark moment. It's when this whole theory becomes a hard financial reality on a quarterly report. So really, what we're witnessing here is the birth of the on-chain treasury. It's a whole new kind of corporate asset, one that a company both owns and is productive. BitMine is basically planting the first flag on a brand new frontier of corporate finance. And all of this leaves us with the ultimate question, doesn't it? Is this incredible experiment the future of how all companies will one day manage their assets? Or is it a really bold, high-stakes gamble that's just a cautionary tale waiting to be told? The answer to that question, well, it could have implications that go way, way beyond the world of crypto. I guess only time will tell.